Hello traders, this is Alex with the Stock Matrix program. Welcome. This is my X account, Twitter account, and I do post some of these trades on there, a few other things. It's just kind of a nice place to go, 'cause like this last trade is only one trade and it was not that big a deal. But anyway, I put it on here. So if you don't see a video, you might want to check out the Twitter and then you can at least look at the chart or have a reference back once this video is done. We had one trade this week. It was Microsoft. MSFT is a symbol. And on the 22nd, we bought calls there. But this is the stock part of it, which gives me an idea where we're at. And just a quick reference, right? I like to keep track of, the GAN timings, right? 45, 90, 120. Well, we're coming into 120 on Google since I bought it. Now, again, officially on the system here, I bought it on January 6th. So it's a little deceptive, but not meaning to. But, in the trial period when I had it on, this is where I actually bought it. And so now on the 6th, this is where I officially bought the calls on the system. So a little tricky there looking at it, but not meaning to be deceptive. But, again, January 6th was just a date picked out of the blue. But anyway, Adobe has a 40, we've been in that short trade since 45 days. This is kind of significant there. The statistical part of the Matrix program, again, we have annuals, again, a WD-GAN thing that I like to keep track of, but it has annuals coming in, and you can read through these. Now, the Microsoft does have one over the weekend here coming in, a high from 2011. And then the next one will be January 31st at the end of the month from 2006. Again, both highs, kind of interesting, right? And then you got days off the high is 2004 or 204 days, and off the low is 813. I picked 3 years. It's probably longer than that now because again, that's kind of the COVID kind of low-ish. So it'll be longer than 3 years. I'll probably leave this on here. So anyway, it's 830, or we're at 813 days now. Again, the next GAN number is 855. Again, that's a cycle of basically 45 calendar days. Now let's look at the chart on the stock matrix chart. This is my chart that I use. I manually chart it, which I think is important, right? I mean, it gives me the flow, gives me a feeling of the market a little bit. And I used to do it all on pencil and paper before computers, but I still like to still kind of manually do it through a spreadsheet. Again, I use the moons for my time because it's accurate, and I can go out 25 years if I want. It's a little different than a daily or weekly, right? And you could use whatever, as long as it's mathematical. And I also use the mathematical square of 9 as my pricing. So the higher it goes, the more wider it gets, and the lower it goes, a little bit more narrow it gets. But it's a square of 9. Again, kind of combining all my knowledge of GAN into one deal. Solar eclipses are important to me, and so on and so forth. And again, I hate to repeat this all the time, but it's kind of important so people understand where this chart comes from. This is how I go long or short, or buy, buy or sell, or buy calls or buy puts, right? Puts, you make money when the market goes down. Calls, you make money on your bet when it goes up. So that's how I come with this. Now you can see the chart itself is a little choppy, so that's a little disconcerting, but just how it is, right? Let me get back to my one page. Hang with, yeah, I've got it a little more condensed so you can see it on here. I had to put it in a Word program. But big flying range here back in 2024 in the summer, and then we've been basically inside that range since. These dotted lines are solar eclipses, just like the other. I keep track of those, and my stop is currently down here at 409. So I won't go short. And again, it trades kind of in a point and figure kind of thing, but it has to have 3 boxes, right? So again, the trend was up, kind of went up here, but I didn't base anything until we had the set of 3 getting taken out, and which was this week. In my opinion, to trade like a professional, you really need to understand all the data. Now it can have a data overload. I've went from extremes, right? I was a big mathematical nut, 10 or 20, 30 years ago, and I tried to, pick tops and bottoms, which, is a standard procedure for a new person trading because they can afford to do that very unsuccessfully most of the time. But I've really come to the realization that to keep it simple, stupid, right? The KSSS method is important to me. But throughout the 4 decades of trading, I've gleaned a few of the important things out that are important mathematically and on a chart basis. Again, a chart is just a history of what the professionals and the rookies traders did, right? People got long at the wrong price, got blown out, greed, hope, fear, right? You can chart the whole thing out based on that. Coming from the commodity world, the bull and bear markets are a little different than in stocks, and the bulls in the commodities are fast and furious and burn out, and then a crash is massive, right? Usually corrects the whole move. In the stock, that's not quite the case. All the stocks that I've studied, tend to have people are so bullish Apple, right? Which they should be, but Apple's had 70% breaks, 50% breaks, quite a few of them. So, if you had $10 million and you dropped her down to 3 million, it'd make you feel pretty sick. So it's not as easy as people say it is. And again, it's all about having your money in control and understanding and condensing it down to simple facts, right? I always have the analogy of a kind of like checklists, right? I've done it so long I have a mental one, but even pilots, when they're going down in a blaze of glory, their plane's crashing, they go through their checklists, right? Even though they know they're probably going to die, they still go through the checklist. I think that's important, right? When you have a checklist, it becomes robotic, and that's why the algorithms nowadays are trade pretty good, and why people like them, because it is no emotional trade. They don't factor any of that in there. They don't care. They just go through everything, and they don't care if you make money or lose money. They don't care if you lose all of it or none of it. Again, the algorithm doesn't care. That's how you got to approach trading, in my opinion, and how to trade like a professional is keep the emotions out of it. I keep track of these annuals because that's important data points in the history of the markets. Now, I don't do them every year. I just go when it's important swing where the public was getting blown, or the rumors were going and the market had a dip. But anyway, these are the annuals, and again, I'd like to trade markets and stocks that have been doing it for a while. Microsoft's an old company. Everything I have is pretty much an old company except for Coin, COIN. That's the only one because I wanted something to do with a Bitcoin deal. So that one was tough to do a lot of my data work, but you can see I keep track of the solar eclipse and other things, and 1, 2, 3 kind of patterns. Basically a cycle of the high, secondary high. Run that out in the future and out from the lows as well. So that's where you see that data point, and that's the portfolio. I won't go through that. You can look that up on X if you want, or review the chart. Well, let me go back, see if you want to pause it. You can. That's the current portfolio with the new Microsoft calls bought in there, and here's the puts that we got out of with a loss of $46. But doing a little research, and again, I'm not a big stock guy, but just doing some simple research on Google, who owns majority of the shares of Microsoft. Again, that's trying to determine why the market doesn't break like a commodity. Well, because you got these large institutional traders like Vanguard and BlackRock that control large chunks of the shares, and then you got Bill Gates is like a small guy anymore. He took which he should, because he doesn't do anything, right? The owners and the CEOs of the company run the thing, and the shareholders basically direct them to tell them where to go. If they don't like it, they'll crash the market. Now, another quick little research just to see what Vanguard actually owns. Well, their top 6 here: Apple, Microsoft, Amazon, Nvidia, Google, and Tesla. Now, just so happens that's the same ones that I have, and they're all very decent old companies except for Tesla. So, but they control a good chunk of the shares. They're 6.6% of their total earning or money is tied up in these. So, talking what 12-13% of their total funds are in these. So, again, if they want it to break, they will make that market break. If they want it to go up, they're going to make that market go up. They have that power. So if Apple, Microsoft, Amazon, Nvidia go down, it's because they want it to go down and they want to buy it cheaper. So understanding the professional money is kind of key here. Now let's look at BlackRock once again. Here's the top 4 companies, again, same ones basically. 5.6% of their total portfolio. 248 billion. I mean, with a B. So again, they control things. That's why these markets just don't break like a commodity or gold or silver, right? Because again, you get small breaks, that's a good break, right? Healthy, probably. But I guarantee you, they want it to go down so they can buy more or something. I mean, they don't, they control the push of it. So again, understanding what causes that. Now, silver and different commodities, they're controlled also. So, one of these days we'll have some big bull, but everybody that has positions, are in the stock market right now are tied up pretty tight. Well, since we're on this, let's take a little time and review the longer term view of Microsoft. This is the yearly chart. Again, very seldom do you make yearly lows. And if you do, you might be careful, right? It just doesn't happen. Here it did. It stayed. Didn't make a new high for, I don't know, what is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 years. Again, 20-year cycle. It finally busted new highs, but that was an anomaly that caused concern. 1998. Don't know what was going on. But then it started making new highs, and then you don't fight it again, right? So it's important. And if you're looking for buy spots, if you get halfway back, that kind of thing. Sorry, I digressed too far here. Let's go to a quarterly chart. Again, another chart that kind of gives you a different view, similar in content. We made a new quarterly low. You're kind of concerned, right? That doesn't happen too much. So then we did have a decent break. You wait patiently for the bottom to occur. Don't just guess. Who knows? It might have dropped all the way back to here, right? So but it gives you an idea of the longer term view and trading like a professional, not like a rookie. Well, let's go to monthly. I'm just going to break it down, and you can see that we had a little crisscross pattern here. A simple thing, right? But again, the breaks are shallow, and even this break's pretty shallow. So it's not. Let me just see what percentage of break that was. 38%, 39%. Now that's a significant break for as short a span as that is. And those are the breaks that are going to happen, right? And again, it could happen, from here. It's pretty possible that we could, an identical break could bring us down to 330. People think, oh, there's no way. Well, I don't care. I'm not trying to tell you where it's going. I mean, I could give you a pretty good idea, but it doesn't matter, right? You still got to make money. Just because you knew that this was going to go down, you still got to be able to make money on that. In systems like I have and other people have and Vanguard and all those, they're a systematic approach to the market. Now, they power play it long term. I can't do that, right? I do not have unlimited funds. So let's look at a weekly. Oops. Here's a weekly chart. As I was prepping this a little bit, since I'm not a big Microsoft trader, but just a simple thing, seems like 636 weeks is kind of a cycle, right? I know it went, but it didn't really start breaking out until the next. Anyway, again, 637. Again, it's just simple stuff, right? I'm not trying to pick anything, but it leaves you a little more cautious in understanding some simple stuff. Now let's go to the daily again. Again, I have all these on my annuals, so that's kind of key to me, is just a simple thing. If I'm going to cheat my own system, right, because I don't have quite the money for it, I'm going to try to find a spot that I can pick a little bit and find that acceleration point. I mean, that's how I trade the commodities. I always found the acceleration point and use the options. Now, why, per se, do you want to use options? Let me get into that in 1 second. Let me close this stuff out. First off, I want to apologize if it's a little repetitive or basic for some, but I think it's kind of important to understand why the options can be your saving grace and be able to trade like a professional. For one, it gives you market leverage, right? Now, what do you mean? What do I mean by market leverage? Well, since we had Microsoft, let's just plug that in. This is Bar Chart, by the way. Bar Chart is a great program that you can purchase and gives you special features. Now, when I typed Microsoft in here, this gives you all the charts and the annual sales and Greeks and different things that you might be interested in, some of the mathematical stuff. But let's go to the option pricing in here. And again, I'm not really too concerned about volatility either for what we're doing. But again, to make up an option, you got to understand time, right? So in this one particular, they have weekly option, monthly options. Hell, they trade all the way out to 2027, so December. So you can trade quite a few years out in the future. We'll go through those here in 1 second. Now, let's just go to the next monthly one, which is February. And again, kind of tells you where we're at the money. But here's the actual quote, $444, right? So 445 is kind of at the money. 442.50, in my opinion, is in the money, a couple bucks. So now the one that we clicked is 27 days long, right? So that's 27 days that you can trade Microsoft, which has a earning coming out January 29th, right? So kind of important. But you can trade that for a couple weeks or a month, I guess, for $1,300. Right, here's the last. Now, you could, if you're got a little more coin, a little better trade would be to go further in the money. You have more risk, but you have less time, right? You're paying for less time, and it's more actual value, or they call it intrinsic value. So that's why, right? But if you bought again, when you buy one call, you're controlling 100 shares. Now, if you bought 100 shares of Microsoft at $440, you're talking 44,000. So 444,000 versus 1,400. Now again, you hold that forever, and you know how it works. But options, you have a time limit. So again, you got to find those points of acceleration. Now a month is not what I like to use. I like to go out in time. Now the system goes at least 90 days. April isn't quite enough anymore. It's only 82, so that's why I'm picking May. I like 90. Gives me enough time. The erosion factor doesn't really occur until about day 50. And how when I look at it, some people say it's different, but whatever, right? The curve starts dropping since you put it on. It's like buying a car, right? You buy a car on the lot, it drops in value. But so yeah, you got this 435 with 111 days, right? So you're talking the same strike for 2,800 bucks, right? Basically $3,000 if you bought the offer, $3,000, 40 bucks. So that's controlling 100 shares at 435 level. So if it drops down, the max you could lose is your $3,000. But you have unlimited profit potential if it really gets skyrocketing. And puts are just the opposite, right? Now let's go out even further, just to give you an idea. And I don't do this too far out, but let's go a year out into the future. That's 356 days to January 16th expiration. That same 435 is 5,600 bucks. Now you're in the money 40. If you bought, it's at 444. You're in the money $9. So in theory, the time value cost is $9 less than this. So if it's at 55 bucks. Is what you're paying, 5,500, right? So $9 off that. So that's your actual time value then, and you have $9 of intrinsic value or actual value. So again, that's not bad, right? Again, for 5,600 bucks, you're controlling $44,000 for a whole year. Now I haven't looked at this, so let's just go out to max and see what we can do. They don't have a 35, so a 430, which is in the money a little more, trades 1,056 days for. So you're in the money now $14, but it's at $107 or 10,000 bucks, right? So you're controlling for 10 grand, you're controlling 44,000. Still a bargain, right? I mean, and you got plenty of time now. You probably never use all that time, and it doesn't erode as much, right? It's like a life insurance policy. It doesn't really erode until you get down to the end. So interesting, right? Now I'm kind of one of more that I don't like to spend more than, $2 or $3 on a trade. So I got to find one that makes sense to me. And again, I'm looking for the acceleration points. So that's what these are, areas that, based on the chart, based on my annuals, based on my system, right? If I don't fight my system too much, I mean, I do once in a while. I usually end up losing, but the matrix system is another guide for me, and where to buy a dip, find those acceleration points. Maybe an area where I can pick it a little bit with lower money, knowing that it's probably higher chance that I will lose because you're fighting the trend maybe a little bit. Anyway, I rambled on here a little bit about these options, but it's kind of important to me how why the professional leverage is pretty key. I mean, you could go deep in the money, right? You could go, let's go 20 strikes just to give you an idea. You can buy a 400 call. That's $44 in the money. For $45, right? So it costs you $1 of time. Now you have $44 at risk. You understand? I mean, that's not a gimme. But again, if you got an ungodly amount of money and you trade 100 shares of stock, you can definitely, for $4,000, right? You can buy, for $5,000, you can buy this and basically trade it like a stock without the risk. No, especially during reports. And some people that have 100 shares on, that's always important to me to keep it around the option price. So if you're trading it, you better have enough money if you're buying 100 shares, because then you can always come over and buy a put. Or let's say you only have 50 shares, but you're bearish because of the report or the election or Trump or Biden or whatever. You can actually go short, keep long your shares, get the dividends, and then buy these puts to protect yourself for the next 2 weeks until the election's over or until the report's done. That kind of thing, or months, or whatever time frame you're purchasing. So there's other ways to use these options for people who have a position already that collect dividends in particular. They just need a little protection. Understanding that most of these will lose if you're doing them cheaply, but again, it does offer you protection. That a lot of people got out of stuff. When the hell would you get out of something? All you do is buy a couple puts, keep your shares rolling. I mean, especially these senators and whatnot get caught insider trading. Jesus, keep your stuff on. Just buy puts against it, or buy the VIX puts, or do something else to keep your positions on. Buy the QQQ puts. I mean, it's simple stuff, right? Then they get on the front page and they have to explain themselves. It's a simple thing. Or if you're a company that needs to hedge a little bit. Anyway, I don't want to get into that. I just wanted to let you know how these options are and how these big money people do the market leverage and trade like a professional is kind of key here. You can pick tops with them, you can pick bottoms with them. If the market gets choppy, you got to trade a little quicker. If it's a trender, you stay in it. All right, I won't take up any more of your time. Thank you, and have a great trading rest of your next week.